All right, good evening, ladies and gentlemen, traders and investors. This is Alex from MarketWise Asia. Thank you for watching this live stream. Today's date is the 6th of October 2025, 10:30 p.m. Thank you for watching this. Okay, both on YouTube and Facebook. If you're watching this on YouTube, do subscribe and also like our YouTube page. If you're watching this on Facebook, also do like as well. All right, if you can hear me loud and clear, please say a hi to me in the comments or in the chat box so that I know everything is good, everything it is fine. Okay. All right, I saw Dave. All right, Dave, thank you so much for responding over there. So if everything is good, okay, say a hi to me. All right, so just to let YouTube and also Facebook know that, the algo know that you're watching MarketWise Asia, so that if we have new content, you will know in the future. Okay, thank you so much over there. Shane, Yue Lam, Alan, thank you so much. Okay, so today, as usual, should be around 1 hour and I should be able to finish my outlook for the week and such. Okay. All right, so let me just share my screen right now. Let me see, where is it? Okay. Okay, so hold on, let me adjust my screen once again. Hello, Tommy. Tommy is a new SEI member. Okay, I saw that you are already inside the SEI group chat already. Yeah, the SEI Alpha group chat. Give me a moment. Okay, so as usual, okay, disclaimer first, whatever I share today, it is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. So I believe you guys can see the screen, right? If you can see, okay, once again, just type OK in the comments. All right, ZJ, thank you so much, okay? All right, so as usual, first, hello, Wiki. The social media channel, this is do follow us if you are new to MarketWise Asia. So this is the link tree link over there. So if you are inside, okay, you should see all the various link. Okay, the Facebook, Telegram, YouTube, TikTok, X, our homepage, and also the on-demand webinar over here. If you're watching this on a desktop, you can actually scan it using the QR code over there. I believe, okay, here it does also give the QR code. Let me just try it out here. Okay, so this is also the QR code on the top left-hand corner. So do subscribe and like if you haven't done so, okay? And yeah, of course, right now, since 30th of September, it is the government shutdown. Okay, so I mean that for those who are new to the market, okay, maybe worried, what does happen to the market if government shut down? Before that, there are a lot of a kind of a fear, worry, insecurity, what will happen. But this is not the first time I have experiencing a US shutdown. So okay, don't be afraid, okay, Hokkien, don't be afraid, okay, so nothing serious, okay, it has been there many times, okay. So yeah, only then for the investor from traders point of view, there could be, some of the data releases will not be out on time. Later I'll go through now, but as a summary, okay, quick summary, nothing to be worried about the economic shutdown. So let's go through this first, okay. Before I go through the economic data, also just want to let you know that the not the market insights of course the market insights conference was over. It was held 2 weeks ago, but okay, the sponsor forex.com, okay, a leading CFD provider in Singapore, also MAS regulated, okay, they still do have the promotion ongoing. So I will just head over to the link over here, okay, and post the link in the comments here. Okay, in case you are new or haven't registered an account yet, okay, right now they do have a $40 cash bonus and it is stackable, okay, up to $2,000, okay. So you can open an account from here and try it out, okay. A demo account is free, okay. No funding is required, but if you want to fund, okay, then they have this promotion where it is, okay, you make a one-time deposit of at least $500 and you place one trade, okay, and you'll get a $40 cash bonus, okay, plus a $10 gift card. So you only need to place one trade, okay, deposit $500 Sing dollars and place one trade, okay. This next flash pay card, promotion is over. It is happened during the seminar itself, so it is not available now, just in case. Okay, disclaimer first, you won't get this, but okay, the promotion of this deposit bonus, it is still there. So if you ever open an account, want to test out this forex.com, by the way, it doesn't just does forex, okay, indices, commodities, stocks, okay, bonds, a lot of things, okay, multi-asset classes, it is all inside. So you can try it out, okay. All right, so let me continue here. And yeah, so just start trading, open an account, and you can just verify using your SingPass. Okay, so you can scan the QR code on the top left-hand corner as well. Hello Aden, hello Mary. So let me remove this QR code once again over here. So I do have some insights for you. Later I'll go through this. Okay, this is from Carson Research. Okay, I think it is a very good kind of statistic, historical data to sum up, okay, what happened in the fourth quarter possibly. But before that, okay, let me just go through my presentation deck here first. Okay, so this is more of a macro update, general update, okay, for the first part of my session. So the second part, okay, later I'll go through the Carson Research, and after that I'll also go through the chart as well. Okay, so I think the key thing, okay, for the start of the month will be the government shutdown, okay, US government shutdown. So Washington hits a standstill. So where do we stand as investors or traders, okay? Plus the macro update over there. So of course, this government shutdown on the midnight on 30th September, the US government officially shut down after the lawmakers failed to reach a funding agreement. So like I mentioned before, this has happened a few times previously. So this is not something to be worried about, okay? So of course, the very immediate impact, okay, will be the non-essential operation, okay, will come to a stop. So-called some of the contract workers, okay, will be stop work as well. What is meant by the widespread furlough over here, okay? And of course, there are some key public services will also stop functioning. So that is the immediate impact, okay, for the people, down the stream there. But from a trader and investor point of view, okay, I think the thing that is more crucial will be the data blackout. So critical economic releases, okay, will be suspended, including the jobs and inflation report. And talking about that, okay, I forgot to mention about the key data releases for this week. So the economic data that's going to be released for this week will be from Forex Factory. Over here, I'll post a link in the comments. Here. Okay, hello Jason, hello Peiwen. So you can see over there, there's a so-called a notification at the top, say US government data may be impacted by the shutdown. So tentative events are subject to delay, revision, or cancellation over here. So seems like for the first part of the week, okay, it is pretty peaceful, okay. Monday, Tuesday, Wednesday, there's no economic releases, data releases out there. And then on basically it's Wednesday past midnight Singapore time. There's Thursday, US Singapore, Thursday Singapore time, 2 a.m. There's also this FOMC meeting minutes. And unemployment claim, it might be affected by the shutdown. Okay, by right, it should have okay. But it depends on whether the so-called the government, or if the Congress itself have reached an agreement. Okay. And then by right, on Friday, there's also the non-farm employment change, unemployment rate, okay, consumer sentiment, etc. So the unemployment, the employment rate, employment change, and the unemployment rate will be affected as well. So these are the key things that you need to be aware of that could be affected by the US government shutdown over here. Okay, let me go back to my deck over here. Okay, of course, the market concern is that because the Fed, okay, and the trader investors, okay, look at the data releases, for example, unemployment rate, for example, okay, non-farm payroll, etc., okay, as a key guidance for decision making. So this will be the market concern, okay, from a trader point of view over here. Okay, and by having said that, okay, I think last 2 weeks or so, I've been talking about the economy as well. So the economy, it is still growing pretty well. Okay, so since July, the data have broadly surprises, okay, to the upside. Okay, the GDP growth, okay, it is at 3.8%. So, consumer spending, consumer growth, it is still quite resilient. Okay, so the retail sales have accelerated over the past 3 months through August, reaching the fastest pace since 2023. Okay, and the auto sales, okay, and same-store sales showing a solid 6% growth. And not only that, okay, the AI story, the AI narrative, it is still in play, it is still growing. So there's still heavy AI investment, okay, by companies right now. So equipment and the intellectual property investment is still growing, okay, at a fastest rate since the dot-com boom bubble, okay, late 1990s, okay, the internet boom. So the major tech firm projected to spend 400 billion next year. So major tech firms, you can think about, Meta, Google, Amazon, and all this. They need to grow the AI part of the thing because they cannot afford not to grow it. Okay, I think if I'm not mistaken, Mark Zuckerberg that said that it has to so-called invest in AI. Okay, it might lead to overspend or some excesses. Okay, but it is better than they lag behind. Okay, other competitor. If AI really grow to a very so-called it's really growing, and suddenly if Facebook did not manage to catch up, okay, then at the end of the day, people will question, okay, how come Mark, you didn't go and spend on AI and grow this pie, etc. Now we are lagging behind other competitors, etc. So they cannot afford. So it is a competition among all the tech firms as well. Okay. So this is just a visual representation, but that's like what I mentioned just now. Okay, the retail sales growth has accelerated ahead of the government shutdown over here. Okay. All right, Tommy say, scared of China. In a way, yes. Okay, in a way, yes. Okay, but between the US and China itself, okay, the among the tech companies, they cannot afford to lose to each other. Then they will lag behind already. Okay, so they have to spend excesses, okay, to catch up. Okay, whether in the end, whether AI is just a bubble or whether there's a real growth in the future, like the internet. Okay, of course, in hindsight, we know that internet is the real thing after more than 30 years. Okay, now it's part and parcel of life. But when you were back in 1990s, you don't know whether it is like it already grow into such a huge extent that it's everyday part of the life of the people, right? So no choice, they have to grow this part. Okay, so you can see that average growth of the retail sales have been growing steadily over there for the retail sales. Okay, and the shutdown, okay, the shutdown of the economic impact, okay, it is mainly just short term, so 0.1 to 0.2% GDP drag. Okay, so it is delayed, okay, rather than eliminated spending. So eventually, okay, the government will still spend and such, okay, but it is just delayed. Okay, and the businesses are depending on government contract, okay, will face permanent losses. It's just that Singapore civil servants, okay, government Singapore, they do give a lot of contract, a lot of work, okay, to companies, etc., subcon and all this stuff. So same for the US, business that is dependent on the government contract, okay, will face some losses at the start over there. Okay, but historical precedents show quick rebound once the funding resume. Okay, so once everything back to normal, okay, it will be a quick rebound. So growth may slow in Q4, but from a strong starting point with activity rebounding in Q1 2026 next year. Okay, and of course, previous, I think for the past 2 weeks, I also talk about the labor market cooling. So the cooling continues over there. Okay, so the unemployment rate, okay, still stay pretty constant. Okay, not much increase. Okay, still at about 4.3%. Okay, but of course the government shutdown. Okay, right now we can't really use the official data, so we can use this private ADP payroll. So this is a private data. Okay, so it is negative 32K. Okay, and the amount of workers that has stopped working, what it meant by furloughed workers, it means that I think they stopped work. Okay, it is estimated to about 750K. Okay, and the key thing, okay, I think some later I'll show you the chart, right? The job openings, maybe you cannot see blocked by my camera, but it is fine. Okay, job openings have dipped below unemployed worker for the first time since 2021, and companies are reluctant to hire. But the good news is, okay, layoff remain very small. Okay, layoff remain very small part over there. So this is what I meant by that over there. So this is the job opening, number of jobs. Job opening is the golden color. Okay, the number of unemployed, it is the dark blue. So we can see that the number of unemployed in thousands over there. Okay, the job seekers, okay, rising steadily. Okay, not sharp spike, but steadily. But you can see that this one is the one that is so-called reduced by quite a bit, the number of jobs opening over there. So there are a number of reasons now. Okay, I mean that companies are worried about the future economy, and of course potentially could be recently, okay, the AI so-called potential effect. Okay, I believe you have heard from the news that entry level kind of job might be limited, because a lot of these entry level job, okay, the AI can do. Okay, so right now the market doesn't need so many entry level job, which means that a lot of new graduates, okay, might face a challenge, okay, finding a new job. Okay, once again, I don't know about you. Okay, maybe do you have any, like, for example, your relative, your friends, or your or maybe even your own sons or daughters, they just graduated from university, and they have difficulty finding jobs, etc. So previously, okay, it was kind of the middle management, okay, that potentially can get so-called X the most, okay, because the pay, it is a bit high, but doesn't you're not high enough, okay, to not get X. Okay, so right now the tide seems to have reversed. Okay, middle management seems to have to keep their jobs over there, because you need the more senior people, okay, to keep the so-called the things going. Okay, but the junior roles, you don't need so many of them. So that is like suddenly, like, the role is being reversed out there. Okay, of course, those at the top, the CEO, COO, the C-level suit, okay, out there, okay, it is still pretty much intact lah. Okay, it is the role out there. Okay, so, and also I'm still not sure about you. Okay, I think the peak of the programming, the coding narrative, I think it's just before COVID. Okay, do you realize that do you remember that just before COVID, people are talking about, wow, everybody need to code. Okay, you need to be a programmer. Like, coding is the future. Yes or no? If you can remember, okay, just type yes in the comments. Okay, in the chat over there. Okay, all right. And after that, okay, if you really, if you are a student, really take heed of this kind of hype over there. Okay, first of all, if everybody is going to learn coding, okay, programming, there will be a lot of supply also. Correct or not? Okay, there'll be a lot of supply. And not only that, now not only we have a lot of supply, a lot of software engineer, software developer, okay, but right now the AI is also making a lot of this software engineer job redundant, at least for the junior role. Okay, it is a little bit like the same, like, for example, I'm not sure about you also. Can you remember in Singapore context? I think, I don't know how many years ago, number of years ago, I think the government were pushing for the bioscience, okay, life science, not bioscience, life science. Okay, after that, the whole industry just died. Okay, so if you were like listening to the government, when it's starting to announce that you should hit life science is going to be the future, that kind of thing, and you enroll into a university program for life sciences, by the time you graduate and everything come out, okay, there's not much roles out there already. I think it is the same for now also. Okay, so at the end of the day, my story is that you cannot just rely on the hype, or just because you think that a industry is going to pay well, then you go and enroll into to do that kind of thing. Do you agree with me or not? All right. If you agree, once again, just type A in the comments over there. So of course, at that point in time, if you happen to graduate and you are just right at the, software engineer kind of a booming stage, that's good to you. But now I think it's a bit tough. It's a bit tough, okay? Okay. And of course, in terms of Singapore context, right? Even if you want to get a job, for example, a mid-career change into, for example, software developer, okay, software engineer, it is not like you can just attend a skill future course for a few months, for 1 year, okay, and then the government, the company out there, will hire you, okay, to become a software engineer, okay. I know there are some advertisement now, okay, on the TV talking about skill futures, mid-career change, successfully change. Okay, I think the chance is very small. In a way, to me, it's a bit like propaganda. I'm not sure whether you agree with me or not. Okay, imagine if you were an employer. Okay, would you hire a 40-year-old guy out there, previously were maybe from sales or from other non-technical role, suddenly just because he attend a skill future course, learn some programming, some coding skill, you're going to hire him for the coding job? I don't think so, right? Okay, if I were the employer, if I were the startup, I would rather hire a fresh grad, okay, who can so-called do work faster than you, think faster than you, and such thing, right? Okay, so okay, and I feel that a lot of these skill futures, how to say, the skill futures courses out there, a bit 骗教 one. Again, you decide, okay. They are there just to take the government money, okay, not because they really provide a really good course out there that can mix the, how do I say that? Match mix the jobs role out there in the market. Okay, yeah, it's all, yeah. For example, the AI, I think a lot of them just targeting the old people. Like, oh, old people there, okay, AI job, okay, you see a lot of booth, ask people then to sign up for the AI courses. And all of these AI courses are, to be really honest, I feel it's very nonsense. It's a bit nonsense out there. Okay, again, this is my personal view. Okay, I mean that my view is that a lot of it is just out there just because of the government funding. If you strip away the skill futures government funding, these businesses won't survive one, okay, by providing these courses. See, I don't know whether you agree with me. This is my personal view. So all this a bit 骗家 one. Okay, I'm not saying all of them are 骗家, but many of them are. There are a few good courses out there that can really upskill you, but many are not. Okay. Anyway, I think outside of the topic already. Okay, outside of topic. Anyway, so back to the Fed. Okay, it is flying blind over there. So the Fed faces unprecedented challenges with key economic data available. Skill future, all this, yes, all the hobby baking one, okay. But if you're talking about photography, all this, okay lah. Okay, if you're talking about really upskill you, okay, to change into a new career role one, I think it is a little bit tougher. Okay, from 2 point of perspective. Okay, from the employer perspective, I believe not a lot of private, okay, employers will hire this kind of mid-career change. Okay, if there is, okay, the initiative will be from the civil service side, okay, the government side. They have to take the initiative, okay, to employ you from a mid-career change kind of thing. Secondly, of course, as I mentioned, it is a 骗家 one. A lot of this, trying to upskill you one, not that good lah. Okay, not that good. Next year, no more baking. Really? MH, next year, no more baking. I don't know. Where do you get the news from? Maybe you can elaborate on that. Okay, so it means that next year there will be no more such skill futures things on baking one. Is it? Okay. Yeah. So anyway, this September turning point. Okay. So I think, okay, October, at the end of the month, the rate cut will still proceed. Okay, will still proceed. Okay, so even though there is this data blackout challenge, okay, and the expected path forward will be a gradual easing towards the 3.2, 3.5% rule. Okay, with, like I mentioned, the October 29 cut likely over here. So we can head over to the bit.ly target rate over here. Okay, so with the next FOMC meeting, the end of the month over there, 23 more days left. Okay, you can see 29th of October. So the target, not the target, the current interest rate now it is 4 to 4.25%. So there is a 95% chance, okay, that you cut another 25 basis point, okay, 25 basis point, that is 0.25% to 3.75 to 4%. So I think it is as good as the Fed will cut. Like I mentioned, the Fed nowadays doesn't like to surprise the market anymore. Whatever things that they want to do, okay, they will prep the market very early, okay, to prevent a sudden sell-off, okay, a kind of a knee-jerk reaction, that kind of thing. So it is well prepped. The market, it is already anticipating that it will cut a 0.25%. Okay, can you just type 25% just to let me know that you know about this? Okay, so this is nearly as good as 100%, at least from this, at least for now. Okay, at least for now over there. Okay, so you can see over there, back to neutral. So you know, this is the CPI. It is hovering at about 3%. Okay, 2 to 3%. So the Fed policy is gradually towards the to about the 3% range over here. Okay, so the market, okay, even though this year you seems like a lot of bad news over there. So for example, at the start of the year, there is the Trump tariff, okay, in April. So after the so-called the sell-off, the market has risen again. Okay, and of course, plus a lot of geopolitical kind of news, news like, you know, war, and a lot of things. I mean, I can't remember, but there's a lot of so-called ongoing news and everything now. Okay, bad news over there. But the S&P Q3 gain is 8%. Okay, Nasdaq is 11%. The small cap rally 12%. So all in all, there is a 31 all-time high year to date. So the market just kept going higher. So actually, okay, like I mentioned, okay, it is actually not surprisingly, okay, not surprising that the market will be higher this year. First of all, okay, if you know what I do, you know that I don't really look at the market news, okay, to tell me what to trade and how to trade, that kind of thing, when to trade, okay. I look for data, okay, I look for data, I look at the price action meaning that I look at the chart and see what the price it is doing, okay. So you know that seasonally, okay, or historically, okay, the post-election year, typically it is very bullish. It's pretty bullish. So this is like, you know, there's one data point that's telling me historical data. You know, secondly, you know, we are after the 2022 market, bear market. Typically, a bull market you last about 4 to 5 years. Now we are still like in the middle of the bull market. So there are a lot of so-called data pointing that this year will still continue to be a bull market. So you know, all these so-called news out there should not shake you out, okay. You know, you need to know what to trade, okay. Those analysts talking about the news, everything, okay, they are just trying to make news, okay. They're just trying to do some analysis, but a lot of time it is inactionable. It's not actionable. You can't use that. You can't use their news, okay, the analysts to trade the market, okay. Yeah. So anyway, so the two forces that is still fueling the market right now, okay, of course, is the AI innovation. So Desmond say AI bubble, it could be, okay, it could be, but right now, I don't think we are still at the peak yet of the AI bubble. So it's still not very bubbly yet, okay. Again, this is a bit subjective, okay. From what I see, okay, like I think I mentioned last week also, okay, I don't see a lot of people talking about the stock market right now yet. Okay, those who are inside, you talk about that, but outside of that, okay, I don't see a lot of people talking about the stock market yet, the AI thing yet, at least for now, compared to 2 years ago, near the 2021 peak, okay, just before the bear market. That one is a lot more bubbly, okay. Wow, people talking about, oh, I must invest in the stock market lah. Okay, if you don't invest now, you lose out lah. FOMO lah. Okay, you need to invest in super stocks, growth stocks. Okay, that kind of thing. Now, no, you don't hear this kind of thing anymore, right? So it's a lot more quietened down, okay? No such hype, at least for now, okay? For now, okay? So I think there's still legs to go, but of course, you cannot expect the price to keep going higher and higher and higher without a correction or pullback, lah, okay? Right, all right. So a normal, up, down, up, down, up, down correction, surge correction, and surge it is normal, okay? And lower rate, okay, it is quite expected. So, there's a momentum aspect, resume easing. So those rate sensitive sectors, okay, or consumer discretionary, small caps and emerging market will benefit from the lower interest rate, okay? So like I mentioned, right, historical shutdown, okay, out of the 20 shutdown, okay, market shows resilient with minimal impact, okay? Right, most of the time, okay, it is positive, okay, it is higher 6 to 3 months later, okay? So, right, so it is nothing much. So you can see over there, okay, the return, the performance of S&P during and after the recent government shutdown over there. Okay, most of the time, okay, 6 months later, it still goes higher. You can see that based on historical return, it still go higher. So don't be afraid of this shutdown. It is, in Chinese, I say 做戏 only lah, for sure lah. Okay, then they can argue all they want. Okay, don't approve this, don't approve that. Okay, in loggerhead, but at the end of the day, okay, it will be passed eventually. The market, the government will still resume eventually lah. Okay, so the key takeaway from this macro update, it is that the shutdown, okay, and all this has a limited economic impact. Okay, so the Fed will also continue easing. So as far as I'm concerned, okay, the 29th October Fed meeting, it is as good as 100%, 0.25% reduce of interest rate. Okay, and the market resilient. Okay, the market is still pretty resilient out there. Okay, so yeah, so I think that is the end of the presentation for that. Okay, what I want to go through with you, okay, it is this from the Carson research over there, a quarter for the history book. So you can actually, I'll post the link in the comments. Okay, you can actually, how come like that? Hold on. Okay, so I'll go to the page over here. So this is from Carson Research over there. Okay, so right now we have more than 100 people in the room combining on Facebook and YouTube over there. So just another very quick reminder here, in case you are new, okay, or haven't opened a forex.com account. Okay, forex.com, it is actually a CFD provider in Singapore, and it is also regulated by MAS. Okay, don't be mistaken by the forex.com. It doesn't just allow you to trade forex, it can allow you to trade multiple asset classes, okay, such as stocks, indices, commodities, okay, bonds, etc. Okay, so you can not right now, they still do have this bonus until the 20th of October. So you just need to make a one-time deposit of at least $500 and you place one trade. Okay, you get a $40 cash bonus plus a $10 gift card here. Okay, so this is what I meant by this over there. So this is the giveaway. Okay, not giveaway, I mean that the bonus. Okay, the giveaway for this next flash pay card, it is over. Okay, it is over. Okay, so you can scan the QR code over there. Okay, so the bonus is you make a one-time deposit of $5, place one trade. Okay, you get $40 cash bonus and a $10 gift card. Okay, you can just open an account. Opening an account is free. Okay, doesn't cost you money. So you can just open an account and do a demo, play with the system, the platform, etc. Okay, you can scan me over there. You can post the scan the QR code. Okay, I'll post the link in the comments once again over here. So basically it's bit.ly/mic-promo here. Okay, I'll post the link in the comments. Okay, so this is the Carson research, quite a number of them. Let me just try to go through briefly over there lah. Okay, so all right, the third quarter is done. So what follow the next 3 months? Okay, a lot depend on what has happened. Okay, in August, September, October, these 3 months. So you can see that. Okay, this is the best September. Okay, in 15 years. Okay, I'm trying to zoom in. Okay, this is the best one of the best September in 15 years. So a lot of time, typically based on seasonal trend, historical data, August, September, it is not a very good month. So this year, okay, the market did not follow the script. Okay, this year the market did not follow the script. So this year, August, September, it is a good month. September, okay, a 3.5% gain. Okay, all right, and it is also one of the best Q3 return ever. Okay, essentially it's the same. Okay, but it's one of the best as well from 1970 to current. Okay, and this year, okay, there is 23 all-time high. Okay, in Q3, one of the most ever. Okay, typically, okay, like I mentioned, Q3 it is not a very good month. Okay, from a historical point of view, but this year there is 23 all-time high in 2025. So now what? Okay, let's start with October. Okay, all right. So October down 3 in a row. Okay, in a row, been a long time. Okay, I think last year it was down also. Okay, so quite rare that it will be down 3 in a row. So if you want to down 3 in a row, okay, you have to do 2022, 23, 24. Okay, and no, sorry, 2023 and 2024. Okay, if you want it to be down 3 years in a row, you have to go back to the late 1970s where the S&P it is down 3 years in a row. Okay, for the past 2 years, it has been down. So the odd might be, it depends, okay, might not be there, okay, but you know, this is telling you that statistically, okay, quite rare to be down 3 years in a row. Okay, the market can still be choppy, okay, okay, all right, but I think, but based on historical data, even go back to 3 years in a row, it's 1970 lah, okay, and October is historically the most volatile month, okay. But okay, but the average post-election year over there, okay, you can see that, okay, typically it is also quite positive over there. Okay, you can see that the black color, this is the post-election year. So post-election year, it is typically quite positive. For the past 20 years, it is also quite positive. But all in all, October isn't all that bad, okay, since the past 10 years or so. Okay. All right, and okay, if okay for the first 9 months, okay, you mean that from January until September, if the S&P return more than 10%, okay, all right, the Q4 return, okay, eventually you can see that it is quite strong. Okay, you can see that overall, okay, based on the past historical record, any year where there is a positive, okay, year to date return until September, okay. October return, you can see that it is quite, you know, mixed lah, okay, quite mixed. 50% chance that it can go higher, 50% chance that it will go lower. But towards the end of the year, okay, October, November, December, overall, there's a 83% chance or 85% of the time, okay, the market does go higher until the end of the year. So the odds are with us, okay, that, you know, there could be a chance that towards the end of the year, the market could still go higher, strong finish until the end of the year, okay. And more about the fourth quarter over there, okay. Of course, you know, by now you guys should know that typically fourth quarter there is a Santa Claus rally, etc. Okay, so the fourth quarter historical has been the best quarter of the year. Okay, higher 80% of the time and up 3.8% on average. So this is Q1, Q2, Q3, and Q4. Typically, Q4 it is the most bullish, okay, of the whole year over there. Okay. And the Q4 post-election year, year one, it tends to be the most bullish, one of the most bullish also, okay? All right, quite solid, okay? Not the most bullish, one of them, okay? But it is quite a solid year out there, okay? All right, and a new high in September are a good sign. Again, these are based on the past historical report over here, okay? So you can see over there, new high in September. So Q4 report, okay, it is generally doing quite well over there. So 90% of the time, okay, the market, okay, will go higher in Q4 here. Okay, So wrap it up, okay, basically it's saying that, you know, based on the past result until September, okay, there's a good chance that we will end Q4, okay, higher. Again, so again, this is just based on historical record, okay, not saying that you'll be like this year, but the odds are with us, okay. All right, clear so far? If you are clear, just type yes in the comments, okay. All right, so if you enjoy the sharing so far, okay, just encourage you to give me a like, share, and comments. If you're watching this on YouTube, okay, please subscribe to our YouTube channel and also give us a like as well. If you're watching this on Facebook, okay, do follow us on Facebook and also give me a like also on this live stream also. Okay, so let's head back to the chart right now. So today, okay, today this is quite positive, okay, quite positive for that. So if you go to the S&P cash index, the spot gamma level over here, you can see that it is about 6,700 okay, the zero gamma level. So it continues to go higher over here, 6,007, okay. So if price can stay above 6,007, okay, then will be good for the market. If price do break below 6,007, there could be more downside to go. So based on what I mentioned last week, right, I said that, you know, the market could be choppy, okay, or maybe some a correction in October. So I think that it is not the easiest month to trade, at least for me, okay. Surprisingly, okay, when some people were bearish about August and September, okay, I just followed the trend, okay, and it was actually very positive for me, okay, making use of my seasonal data, okay, and those who are inside the SVI will know, okay, August, September, quite spot on, okay, very good trades for me as well. October didn't start off so well, but I think that's perfectly fine, okay, because I cannot expect every single a month to be like a Sunday, okay, okay, but anyway, yeah, so this is the zero gamma level over there. But just to let you know also, okay, based on the weekly time frame, okay, there is a potential star reversal signal. I think it has been quite some time since I mentioned about the potential star reversal signal. This is based on the weekly time frame, okay. Based on the weekly time frame, there is a potential star reversal signal. But again, okay, it doesn't mean the market will crash, okay. All right, even if the market does have a correction, okay, it doesn't tell us the magnitude. So I won't know how much it will drop, okay. It is just like a warning sign to me that, hey, the market, it is a bit overbought based on the weekly time frame. So again, okay, I'm still bullish on the market, okay, but okay, I'm just a little bit cautious, okay. I wouldn't be aggressively going long, okay. And based on the options flow, okay, November, December will be a better month. October, a bit mixed, okay, based on the options flow out there. So there, I think the S&P is not so positive, okay. All right, for the options flow. Anyway, again, for the potential star reversal, I can tell you that it is not always accurate in a way that, you know, when it is in a bull market, the market tends to go higher. So case in point over here, okay, you can see that there is a star reversal signal here based on a weekly time frame, and the market just continue to go higher, okay. Here also, it doesn't work out that well, but okay, in April, it worked out very well during the Trump tariff. It really marked the bottom over here as well, okay. And then previously there was this correction for 3 months, short correction for 3 weeks over there. So all in all, what I'm trying to tell you is that, okay, the market, okay, right now it is a bit toppish, okay, but it doesn't mean that the market will have a crash, okay. But a correction, okay, less than 5%, that kind of thing, it is still quite normal. It is still quite normal, okay. Clear so far? Once again, if you are clear, just type OK in the comments, right? Type OK in the comments over there. Okay, so if you take a look at the SVI Alpha board over there, I don't mind sharing with you this seasonal trend, okay? So I keep sharing with you the same thing, okay? By right, okay, based on post-election, okay? All right, since 1950, post-election, there's over 18 cycles over there. typically, okay, from October onwards, okay, the market towards the end of the year will generally trend higher. But of course, you can see that, you know, this vertical line, it is right now the phase that we are in right now, 5 October to 12 October this week. Okay, you can see that generally October, it is a choppy month. Okay, based on the post-election year. Okay, post-election year over there. Okay, post-election year. So it's not surprising if the market really is a bit choppy. Okay, then again, November tends to be a better month until December. So this is S&P post-election year. Okay, I know, and some people are also very interested in gold. Also, gold. Okay, people asking me, oh, can buy gold or not? Can buy gold or not? Okay, gold. Okay, you know, wow, market just went up. Boom. This time has been going higher as well. Okay. So, okay, in my options flow here, okay, if you actually search for, like, for example, the tech GLD over there, like this is the more recent one, okay, like net intention since last week, 2 weeks, for based on 2 weeks flow, the net intention is still bullish. Okay, previously it is still bullish also. Okay, all right, yeah. But having said that, I did not really participate in gold. Okay, because to me, I'm more of a pullback guy. I don't just like, oh, go up. I just blindly follow and just buy. So I don't trade like this, okay. I don't trade like this. So I need to have at least some kind of pullback, you know, then buy, pullback, then buy, that kind of thing. So previously I mentioned about gold. It was somewhere also around, I think around here or around here. Then this is a pullback that I like to see. But after that, it is quite hard to enter into gold. Okay. So, okay, as of now, if you take a look at the gold seasonal trend here, gold seasonal trend, okay. Okay, right now we are still in the phase of a bullish seasonal trend, okay, based on the past 15 years over here, okay, possibly, okay, until the end of October. Then I will take a look at the options flow, see whether, okay, it really have a confluence, whether the options flow is showing a bearish sign of view, okay, and also the seasonal, okay. But you know, if you're talking about seasonal trend, it is bullish lah, okay. So don't ask me can buy gold or not, can buy gold or not, okay. Okay, some of the non-subscriber can buy gold or not, that kind of thing, okay. If you want to buy, you buy, okay. Your heart must be peaceful lah, okay. All right, don't buy already and keep asking can buy or not. Now is it the time to go in now? Can still buy or not, that kind of thing, okay. Because I don't buy it is because, okay, I feel that at any point in time the music could stop, okay. So it is not my kind of trade right now. So it is okay for me, okay. I told my members, okay, it is okay for me to miss certain asset class. So if I miss this gold right out here, it is perfectly okay for me, okay. It is okay not to trade gold, not to be inside gold. Okay, I don't need to catch every single stock, every single asset classes that is moving out there, okay. I stick to what I know, okay, and I stick to my system. I mean that seasonal trend. Every single week there are things to trade, okay. So I'm okay with that, okay. In case you want to know gold, okay, yes, the seasonal trend, it is still there, it is still bullish, but it is quite hard for me to have an entry, okay. Maybe, okay, if there's a pullback, then maybe I could look for entry to buy into gold again, but for now, not yet. So I won't just blindly chase gold, okay. Any questions so far? So, okay, so you can see over there, you know, S&P, you know, the Nasdaq, okay, yeah. So October right now, it is still bullish, but I expect price to be a little bit choppy, okay, until the 17th of October OPEX day itself, okay. I expect, okay. Silver, it is the same, okay. Silver, it is the same. So it is under precious metal. So very likely, not very likely, I mean that if you don't know, very likely if gold is surging higher, silver will be surging higher as well. So it is the same under precious metal. Okay, under precious metal, it is the same. Okay, so like previously, I mentioned about copper as well. So when I first mentioned copper based on the seasonal trend over there, okay, it is also another metal. So when I first mentioned, it was somewhere around here, okay. Then the price just continue to go higher. I think based on the options flow data, I think can search, okay. Over here, you see? All right, October 15, okay, window September 3rd to October 15, okay, based on the past 10 years, 9 years, it went higher, 90% win rate out there, okay. So copper just, so there are many other things to trade. No need to, for me, as in, at least for me, no need to just keep trading gold, okay, not my kind of setup, then I just skip. So again, if you think that it is for you, then you just go ahead and trade, okay, you manage your risk and such, okay. Again, I'm not asking you to trade gold, I'm just sharing with you from the historical point of view, okay, historical record, okay, data, that it is like this, okay. So don't come and fault me, say, hey, Alex asked me to buy gold. I did not ask you to buy gold. If you want to buy gold, you decide how you want to trade it. For me personally, I don't have gold position right now, okay. Right, so nowadays I'm very scared to share certain things, okay. People say, oh, I asked you to trade oil, I asked you to trade gold, that kind of thing, okay. Any other questions so far? Okay, yeah, and based on the last week, okay, last week I talked about my trade idea for that week last week. Okay, it is still in play. Last week I mentioned about bonds. Okay, bonds ZB or proxy for the ETF will be TLT, 3rd of October to 27th of October. So right now we are just right at the start of this bearish favorable period over there. So if you take a look at yeah, so I looking at, where is it? Okay, bonds over there, TLT. Okay, so starting to grind higher. Okay, and then it dropped today. Okay, in fact, I told my member in today's weekly video update, say I wanted to actually trade not TLT, the Treasury bonds futures. I wanted to sell a call options vertical spread on ZB. Okay, but I just did not get the feel last Friday, so I'm still not inside now. But it is still in play right now. So again, this is based on historical data. Okay, so don't say Alex say that it will sure go down. I did not say it will sure go down. It is just based on the past historical data. Okay, it is data. Don't come and fault me, say that Alex say you go down. I did not say that. Okay, it is facts. These are facts that historically it went down. Okay, how you want to trade it, it is entirely up to you. Okay, so who else want to know for this week trade idea for the week? Again, this will be based on data as well. This will be based on facts as well. How you want to trade it, it is entirely up to you. Right now, there's, I think only on Facebook Live, there's only 19. Can I get at least 30 or not? Can I get at least 30? Okay, can I get 30 likes? Okay, then I share with you for this week. Okay. So if I don't get 30 likes, at least from what I see on the screen right here, then I will not share. Okay. What's the number allowed on Facebook now? Because right now on my screen I can see like 19 likes only. Okay, any other questions so far? Any other questions so far? Okay, any other question? Anything you ask me? I try to answer you, okay, but don't ask me what stock to trade, okay. This is not a copy signal or trade signal service, okay. All right, the best thing are inside SVI, Seasonal Vantage Insiders, okay, where I share my weekly update, etc., and the options flow, okay, options flow out there. Okay, any other question? 21 likes only, okay, so nobody still want to give me any likes. I think there are more than 120 people in the room combined on Facebook and YouTube as well. Okay, only 21 likes. Hong Kong, where is it? I am based on my Facebook likes, I think so, Sharon. Okay, so Hong Kong, I don't mind just share lah. Okay, I mean that this one is just seasonal trend. Okay, so you can see for Hong Kong, okay, this one over the past 15 years, it is like that. So maybe, okay, we could be a small peak until the mid of October and then drop and then go high. This is what the past 15 years are. But overall, okay, based on I see from options flow, it is still generally okay until the end of the year. Okay, all right. 23. Let me see the Facebook market wise. I think this is just based on Facebook likes only. So right now, Facebook got how many people? Oh, I think Facebook not too many people. I think most of them on YouTube. Okay lah. I let you guys go. Okay, I will just share the trade I did. I think most people are inside YouTube. Okay, actually personally, okay, I also prefer YouTube lah. Okay, compared to Facebook. Okay, so not surprisingly that most of you guys are in YouTube. Okay, so S&P this week still bullish. This one, as I said, choppy. Overall, might still grind higher, but a little bit choppy. So there will be sector rotation or rotation going on. So individual stock, selection of individual stock, it is more important. Okay, of course, on S&P, Nasdaq, these are essentially the mega cap stocks because they are the market lah. They form out the indices lah. So if the S&P, Nasdaq drop, which means that the mega cap stock, the tech stock, they are dropping. Okay, so but there are other pockets of industry I think still looks promising. Okay, which I mentioned into my members lah. Okay, so I won't mention publicly here. Like for example, I mean that's individual stock I won't mention lah, but for example like finance stocks, etc. I think is you can take a look. Okay, all right. Utilities have already went up already lah. Okay, so I won't be chasing them. Okay, real estate I'll be looking that as well. Okay, but the selection of individual stocks will be more important out there. Okay, so for this coming week, okay, so the one that I am looking at, it is actually Japanese yen. Okay, Japanese yen here. So the Japanese yen, let me see. Okay, so this is is it bullish or bearish? I forgot actually. Shit. later I check it out. Okay, before I go first. Okay. This is 9 of October to 11 of November. Okay, 94% of the time. Okay. This is the record. So this is actually Japanese yen. So this is USD. So this is bearish. Okay, this is bearish. Okay, so this is actually a bearish seasonal data over there. Okay, this is bearish seasonal data. So Japanese yen. Okay, in fact, this is based on the futures. So it is based on the 6J Japanese yen. Okay, so essentially, okay, the Japanese yen, it is talking about USD JPY. Okay, it is talking about USD JPY, a dollar yen. Okay, because it is because yen you have to compare relative to another currency. It is always a comparison relative one. Okay, so there's no like only yen, how much is it worth? It has to be compared against another currency. So basically, Japanese yen, the 6J, it is actually USD JPY. Okay, so this is 9 of October to 11 of November, 16 years. Okay, for the past 94% of the time for the past 16 years. Okay, so which means that 15 years it went down. Okay, so if you take a look at Japanese yen right now, or actually today Monday it kept up. So you can see that because this is USD JPY. Okay, so if the US dollar goes up, okay, then which means that the yen, it is coming down. Okay, so which means if you're looking at the dollar yen USD JPY, okay, based on historical record seasonal trend, okay, it tends to go higher, okay, from this period, okay, from this period over here. Okay, so you decide if you really want to trade, you decide how you want to enter and such. Okay, so I'm not asking you to buy dollar yen. So these are based on data and based on facts. Okay, based on the past historical dates over there. So which means they can see that this is the dollar yen. Okay, you can see that the dollar also seems to be going higher as well. The dollar, this is the dollar index. So prior to that, okay, I talked about, how come just keep going up again? Prior to that, I talked about, I think previously I talked about the dollar, okay? I think not shown here, okay? So it is actually going higher. So from this periods onward, okay? So right now, there is a pullback on the dollar index. You can see that recently there was a pullback, okay, at the central pivot range. But I'm a little bit skeptical of this hammer candlestick pattern. But overall, you can see that there is a support at the CPR central pivot range over there, and it's going higher right now, resisted by the cloud resistance over there. But I suspect, okay, in the near future, okay, the dollar, okay, I didn't really haven't checked the seasonal trend yet, but it could go higher. Again, I'm not asking to buy. I think from price action point of view, okay, if can clear above the CPR and the cloud, then it will be a good uptrend out there lah. Because previously the dollar was in a very consistent downtrend over there. Okay, it tried to break above the cloud, but it cannot. Okay, it tried to break above the cloud, cannot. This is the first time in a number of months. Okay, right, you can see that over there. 1, 2, 3, 4, 5, 6. Yeah. Previously it went higher, close higher, but after that it dropped again. So 6 months, okay, it go high, it go lower, and then after that, for the past 2 months, okay, it was still below CPR, and this month it is the month that it is above the central pivot range for now. Okay, all right. Mary say USD JPY should be bullish. Yen is weak now, okay, based on price action as well. Okay, all right. So any other questions? So this is the trade idea for this week. So yeah, actually the bonds, it is still in play. Okay, the Japanese yen, it is approaching the bearish seasonal period over there. Okay, of course, if you look at USD JPY, then dollar yen will be going higher lah. Okay, but the Japanese yen itself, okay, it is bearish. Okay, so which means that dollar yen is going higher. All right, any other question? Any other question? Okay, so I think I've come to the end of the live stream. Just now it's about 1 hour. So if you find value in today's live stream, okay, you enjoy what I'm sharing, okay, once again, just type value or letter V in the comments here. Okay, so I appreciate your time, okay, at the live stream over there. Thank you for staying with me until 11:30 p.m. So yeah, so once again, thank you so much, and I will see you again hopefully next week. Okay, so with that, thanks so much. Good night, 晚安, and bye bye. If you like my session, okay, type letter B or value. Appreciate that. With that, thank you and bye bye.